Hello and welcome to this week's special presentation. My name is Jim Penna, Manager of Retirement Services here at VectorVest, and I'm very happy to be hosting this week's topic, which is titled The Ultimate Retirement Solution: Generate Steady Income Simply. Now, there are a lot of retirement advisors and newsletters out there that look to model how far your retirement nest egg will take you into the future. They address all different types of questions like how long will I live, or how much will I need for health care, what's the future of retirement. I guess it's okay to have the numbers written down and have a starting point. But the fact is, we can't know the answers to many of those questions. So a lot of folks resign themselves to try and do their best to prepare as retirement approaches, and they hope for the best. Well, here at VectorVest, we believe you can do more than hope. Now, I've shared with subscribers and clients for a long time now my conversations with Dr. DeLito about the questions and concerns that are brought up to us here in retirement services. The underlying theme of those questions, in some form or fashion, always comes down to, how do I keep from running out of money in retirement? Well, the answer, we've determined, is what we call the ultimate retirement solution. And that solution is to just keep making more money. Because of the uncertainty that lies ahead in retirement, we can't know all the answers. But continuing to generate a steady income along the way will help resolve a lot of those issues. Let me start by defining what we believe a secure retirement is. It's one in which you have enough income to live the life you desire. A secure retirement is one where work is optional and retirement is affordable. And towards that goal, there are three core strategies that comprise the ultimate retirement solution. The first is capital appreciation. Here's where we find safe, quality stocks that are rising in price in a rising market to grow our retirement nest egg. Next, we focus on income, whether it's selling covered call options for income or building a strong dividend growth portfolio for a steady, reliable income. And then finally, preservation of capital, ensuring your portfolio against violent drawdowns in the market and uncertain times. What I want to do in this presentation is focus on income, and more specifically, the dividend side. So we're going to go back and revisit a strong dividend growth portfolio that I talked about in a strategy of the week that I did back on September 8th of 2017 called Blue Chip Dividend Payers. And here's how you can go back and view that special presentation. If you click Views on the main toolbar, it will bring you to the Views Manager, highlight Strategy of the Week, and from there you can scroll down to September 8th of 2017 and find that strategy, and then over in the Views section you can go ahead and click there to watch that presentation. For now, I'm going to take us back into the program and revisit that search. I want to see how it's performed, and I'm even going to show you how to elevate that performance. So here in the program, the first thing I'm going to do is go up to the main toolbar and I'm going to choose the Unisearch tab. In our search directory here, what I found is the search is retirement. When I click on that folder, it opens up and gives me a list of searches, and I'm going to choose the Blue Chip Dividend Payers. When I do that, it brings up the parameters of the search. It also gives me a quick synopsis of what the search is designed to do. Let's start with some of the basic parameters. I created this to be as basic as possible. The stocks that make this list are from the Dow Industrials, Transports or Utilities, or the S&P 500. It has to reside in one of those watch lists. The dividend yield has to be at least 3% per year. Also, within the VectorVest program, we have what we call the DRIP watch list. That's the Dividend Reinvestment Plan. I want stocks only that have not only paid, but have grown their dividend year over year from anywhere from 10 to 24 years, or from the DRIP watch list called 25 plus, which we also refer to as the Dividend Aristocrats. Companies that have not only paid, but grown their dividends for at least 10 years or more. And then finally, we use the VectorVest proprietary indicator of dividend safety. On a 0 to 99 scale, that safety has to be at least 50 or greater. By doing that, we are able to ensure a favorable payout ratio. In other words, we're looking for stocks whose dividend payout is less than their actual earnings per share, because what good is the dividend if the company can't continue to pay that dividend? And here's an example. If I run the search, we'll see the type of stocks that come to the top, and we sort them by earnings growth rate times the dividend growth rate to bring that combination right to the top of the page. So if I scroll over a bit to the dividend information, we can see that earnings per share has that favorable ratio to the dividend payout. And you can also do it by earnings yield versus dividend yields. So it's a very strong indicator of the dividend safety number. From here, I'm going to go back to the main toolbar, and I want to take us into the Portfolios tab. Because it's here that I have some model portfolios that we've tracked on several different retirement portfolios, but specifically I want to talk about the blue chip dividend payers. I have two different portfolios here that we track in our retirement coaching group. The first one is the URS blue chip dividend payers that was begun back in April of 2018. And when we review the performance, we can see that it's done pretty well. We're up 14% in this portfolio since its inception back on a confirmed call back in April of 2018. You can see the current positions that are in the portfolio. If I scroll over, we'll see the performance of those positions again over the last year. Very little trading has gone on in this portfolio, but we've got a lot of winning trades. Now this does include the dividends that we've received. So that's a 14% return in what I like to call a very boring but very well performing portfolio. So if I go to transaction log, we're able to see here our purchases and then the dividend payouts as they've come in. And again, we've had very limited trading going on, even with the volatility that we've seen in the market. And to take that a step further, if I go into the Viewers tab and I bring up the S&P 500, and I set that date to that April 17th date where the portfolio began, and I run a quick test just to give some perspective here, the S&P 500 is up 6.37% over that time frame. So a very nice performing portfolio that we've got going with blue chip dividend payers. Also in my portfolio layout here, I have the blue chip dividend payers, one that was started a bit further back, all the way back in 2013. We had run a back test, converted it to a portfolio, and we've tracked it since. This portfolio is up 87% as we speak. Again, the type of stocks that are in here, remember, they have to have at least a 3% dividend yield. These are mature, well-established, strong, free cash flow companies that not only pay but continue to grow their dividend year over year. Now, when we look at the performance from back in 2013 when this study began, remember 87% in this case is only the stock performance. Unlike the other portfolio, I've tracked dividends on a separate spreadsheet, and I can tell you that over this time frame we have returned over $28,000 worth of dividend payouts. So when you add those dividends in, we've got a profit of about $115,000 in this portfolio, and even that doesn't include reinvesting those dividends. So that takes us to about a 17.5% annualized rate of return over the past roughly 6.5 years. Again, in a portfolio that requires very little trading and management time. And so I wanted to take some time to revisit those just to show just how well that has been performing over the last 1 year, 3 years, 5 years. Let's take a look. This portfolio started a few years ago. And what happened was last week we had a seminar up in Toronto, and my friend and colleague Mr. Steve Chappell had given a talk on the Profit Locker Pro proprietary stop information. And he began running backtests on different searches, and it dawned on me that I haven't run some of these searches with Profit Locker Pro because it wasn't available when I began the blue chip dividend payer portfolio. Now, what is the Profit Locker Pro? Well, it's a proprietary stop criteria that locks in your profit when the stock starts going down. It tightens automatically as the stock approaches that target gain that we set. It displays right on your stock chart so that you can optimize on the fly. And finally, it follows the stock higher when price even goes above that target gain. So based on Steve's presentation, I went ahead and began to test the blue chip dividend payers using the Profit Locker Pro. If you want to watch a special presentation given by Steve, it was done on January 18th, 2019. If I go into the Backtester tab, what I've done is created a couple of backtests here. And I said earlier I can show you how to even elevate the performance of the blue chip dividend payers portfolio. In those model portfolios that we track in our retirement coaching group, we have a trading plan that uses our profit locker stop of a 100% gain and a 25% loss. So the profit locker is a proprietary stop criteria that allows stock to move higher and have that stop criteria ratchet up along with the stock. Using the profit locker for the portfolio that began in 2013, we have an over 80% return. When I change that to use what's called the Profit Locker Pro, set to the conservative setting using the same time frame, I've upped that performance on the underlying stocks. Again, this doesn't include dividends, up to 103%, a higher annualized rate of return and a little lower drawdown. I went ahead and ran the Profit Locker Pro versus the Profit Locker 100 to 25 gain, again just on a 5-year look back. I did that a couple of days ago, just chose 5 years, so from June 5th of 2014. Again, the results were significantly better using the Profit Locker Pro stop criteria. We did 61% versus 38.6%, which are still good numbers, not including dividends for our objectives in this portfolio. But again, we've elevated that performance quite significantly. And then I also ran a 3-year look. The 3-year look using the 125 Profit Locker stop came back at only 7.5%. But using the Profit Locker Pro conservative approach, we were able to jump that all the way to 31%, a significantly higher annualized rate of return and a much better max drawdown through the life of that test. So the blue chip dividend payers, both 1 year and our longer term look, are all performing very well, and that's why I wanted to revisit these portfolios to show you how easy it can be to generate a reliable, steady income when you do it the right way. We're even able to enhance the performance using the Profit Locker Pro tool. And again, I urge you to go back and watch that special presentation back on January 18th that Steve did, introducing a fantastic new tool. It was a great presentation. And so what we did was focus on one of the 3 core strategies that comprise the ultimate retirement solution. We focused on income, specifically the dividend paying portfolio. The blue chip dividend payers is a strong dividend growth portfolio that can generate not only a steady, reliable stream of income through dividends, but also through capital appreciation, as we saw. If you would like to learn more about the income portion or capital preservation or capital appreciation, we do have the Ultimate Retirement Solution online course being offered next week, a course that will allow you to protect and grow your retirement nest egg. The Ultimate Retirement Solution course is made up of 6 modules, each one building a foundation that will allow you, again, to protect and grow your nest egg. The course will begin by laying a clear path to victory, by starting with defining your objectives and setting clear goals. Without objectives and clear goals in mind, your chances of success suffer greatly. We'll walk through building a portfolio for capital appreciation, the right stocks at the right time. We'll set up a stock buying checklist, balance your portfolio, and set up your plan. We'll do the same thing for the dividend portfolio. Module 4 will focus on that second stream of income that we talked about, and that is selling covered calls. We'll walk through from A to Z how to set up a covered call, how to manage that call, and a very specific trading plan to generate, again, safe, reliable income. The third core strategy was capital preservation, the strategic defense system for your portfolio. Being prepared, knowing what to do so that you can ensure your portfolio during times of market uncertainty. And finally, in Module 6, we'll put it all together, show you how to implement these trading plans, how to manage your portfolio, and we'll leave you with a trading checklist that will ensure that you have each step in order. If you're interested, you can take advantage of our early bird special, only $5.95 for the course. You have until Monday at 5 p.m. Eastern Time, at which point the price will rise to $7.95. You can go to VectorVest.com/URS to get more information on some of the added bonuses that we have in store for you. So again, VectorVest.com/URS if you're interested. And so remember, because of the uncertainty that lies ahead in retirement, we cannot know all of the answers. But continuing to generate a steady income along the way will help resolve a lot of issues.